On today's hot sheet, I'm discussing housing inventory for the past week, a typical home seller in 2025, what they look like, and President Trump's 50-year mortgage proposition. Today is Monday, November 10th, 2025. I'm Byron Lazine, and the hot sheet starts now. All right, news of the last 24 hours, the 50-year mortgage. We're going to get into that. Obviously, as we do every single Monday, we're going to talk about housing inventory. We've got a report on the typical home seller as well, but we will get to the 50-year mortgage. I'm surprised they had time to float that one out there yesterday after the president was at the Commanders-Lions game. He was actually in the booth, I saw, for a couple of minutes there yesterday. And that was interesting, to say the least. Maybe wouldn't try that one again. Maybe your next post is not going to be NFL analyst. But we'll get into it. The 50-year mortgage, is it good? I'm live from Naples, Florida. Pleasure to be with you. It's an honor to be with you each and every single week. Monday through Thursday, it's the only show on the internet that is live every day that the markets are open for the real estate professional. 24-hour look back on the economy and how it impacts housing. Let me know in the live chat where you're tuning in from, of course. Okay, we've got other news, though, from this morning or late last night. Outside of the 50-year mortgage, we've got a government shutdown that appears to be coming to a conclusion. Okay, so 40-day government shutdown was a record shutdown. That looks like it could be coming to an end today with exactly where we started. Okay, no new wrinkles, no new deals. Just what could have been 40 days ago is what we're going to end up with on the 40-day government shutdown. So what I said 40 days ago remains to be the same case. You've got a hissy fit between the left and the right. A little bit of fighting in the sandbox. This is going to be a whole big fight over nothing, because in the end, what they're going to do is just open the government back up, because without an open government, they don't have a position of power in the world. They need the government to be an elected official. So you can't keep the government closed forever when you have power-hungry people who benefit from that system. So the government's reopening could have been opened 40 days ago on this deal, because that's exactly where we ended up. The market, not a big reaction. Market's up about 0.59%, 270 points. So stocks are up, but they haven't moved like, we've seen bigger moves when trade deals have been made and things like that. We've seen, 1.5 point swings on the Dow on other news, economic news. And we're not seeing that here, mostly because this has always been, not on the radar of investors to a large degree, because they knew what we said right here. This will be over and the fighting will stop. And it's all about headlines and trying to win elections and trying to, really just kind of win points with a certain part of the base. Okay, so all right, let's get into inventory for the week. Now that we're past the government shutdown, let's focus on where we're at in our real estate market. Inventory has officially, I will say it, officially started the decline. Okay, we saw a couple of moments of hope there in October. We are in decline mode now. Haley, if you can go to inventory here for the past week, it is up. I'm sorry, it is down over the past week from 856,000 the week prior to 842,000. This is a similar size decline to the same week last year, first week of November. We're up 16.73% year over year. Remember that gap between, this year and last year, it got as high as 31, 32% at one point in the year. So this is a much smaller gap than we were than we had in the spring. Similar to last year, we expect inventory to continue a sharp decline from this point through January or into January, rather, where we should see some stabilization after the first of the year. But these next 7 weeks, as history shows us, we will see inventory come off of the market. Okay. As sellers say, you know what? I don't have to sell, which is a lot of them. And, I've got the holidays coming up and I'm going to be doing the holidays here. Let's take it off the market. Let's not deal with it. Let's revisit the conversation next year. We saw a little bit of an uptick in inventory late October, and then we've now seen 2 weeks of, what we would see here seasonally as expected declines in the housing market. So, single family inventory per Altos research on the decline. We expect it to happen the rest of the year. Single family new listings. Okay. We saw 55,000 come in here for the past week versus 49,000 same week last year. This is in line with all the 2022, 2023, 2024 numbers. Remember, 2024 was the lowest level ever recorded for new single-family listings, and we're not doing much better in considering we're going to see a decline there throughout the rest of the year on single-family new listings. So new listings not showing us any life that we're going to see a real increase in inventory at the end of the year. It's following the same trend that we've seen the last couple of years. Price cuts here, as we sit here today, coming in at 41.7%. 40% was the number last year. So we are still under the 2022 level. We peaked out in 2022 up at 43% when we saw those interest rates really take shape. And but we're well above the 2023 and slightly above 2024 levels on price cut percentages. And there you go. There's your inventory update here for the week, for the past week, as we go into this week. We'll take a look at, do we have pending home sales, Haley? If we do, you can bring that one in. Pending home sales coming at 59,000 here for the past week, off of a 51,000 from the same week last year. So doing a little bit better than the same week last year, but we'll see what we have next week if we see one of these sharp declines. And these declines come, in a week, they come really sharp this time of year. You get your seasonal decline, not just in inventory, but in interest on the market with buyers. In fact, I was just having a conversation here before the hot sheet with an agent about, wow, I thought, I had a buyer situation. You can drop that off, Haley. I had a buyer over the weekend wanted to look at a house, but wanted to wait through the open house before potentially submitting an offer. Wait till the end of the open house, not to provide an offer as, potential one in the hand that they could market in that open house, which, by the way, I don't agree with that strategy. Certainly not this time of year. And then come the open house, they said, "Oh, we've accepted an offer." And it wasn't like a blow your doors off offer. It was just a good, safe, secure offer for the seller. Why'd the seller take the offer so quickly? Well, in 2 weeks from today, guys, it's the Monday before Thanksgiving. 2 weeks from today. 2 weeks from today, most people's concern is, have you found Nan's recipe for the stuffing? Okay. Who's responsible for getting the Bloody Mary mix? Okay. Who's going to be making the pies? These are the conversations 2 weeks from today. And so a seller who actually has awareness around the calendar and what's happening says, I got one in the hand. I got to take it. It gives me peace of mind and security here moving into these last 7 weeks of the year. I don't have to worry about, the Monday before Thanksgiving if I'm going to find a buyer. I've got one right now. Let me move forward. And so if you're a buyer and you actually want a home, I would offer up moving with speed right now. I mean, if it's a home that's been sitting in the market for a long time, sure, you don't have to do that. And these are the things we talk about every single Tuesday morning at 9 a.m. in the BAMX Mastermind Role Play. You could try it out for free on tomorrow's. Get a free 7-day trial on the BAMX. Go to school.com/BAMX. We work through these strategies and how to have these conversations and convert at a higher level. But listen, the calendar is working against patience in this market. And sellers aren't going to be patient. They're just going to delist and come off the market. We've seen high levels of delistings. And buyers who are patient are just going to miss out because the seller's going to say, I'm going to just go take this one because it's got certainty. We're 2 weeks away from Thanksgiving week. Everything starts to fall off the table the closer we get to Thanksgiving and through the end of the year. New listings fall off the table. You just saw the chart. Inventory falls off the table. You just saw the chart. Pending home sales fall off the table. We're in a seasonal business. As much as your business might be bucking the trend, and I'm confident it is, this is a seasonal time where things fall off the table. Okay? When you put your beer down at Thanksgiving, put it upright. Don't lay it down. It's going to roll off the table like a lot of these trends here in real estate. All right. That's your update on inventory for the past week. Let's get into this report here. Part of the NAR research report about the typical home seller, okay? Typical home seller right now. I think this is important to keep in mind. And I just mentioned the typical home seller might be changing a little bit right now, okay, as you get into the seasonality and they want to make quicker decisions. If they're a real seller right now, they want a bird in hand before the holidays take shape. But NAR did their, the report last week, and we've got some data on what the typical home seller looks like. So if you're putting together a campaign for Q1 and you want to target some, maybe a certain demo or the right type of person who might be considering selling, here's some numbers on this. The median age of home sellers right now comes in at 64. Back in 2005, the median age of home sellers was 47 years old. Okay, so typical home sellers now at 64. That's a record age according to NAR. It's the highest level we've seen in the last 20 years, and it's by a lot, not by a little. So they're staying put longer as well. So that's the other part of this deal. Home sellers are just staying in the house a little bit longer. Haley, if you go to the tenure, median seller tenure in a home right now is 11 years. That's also a record here. You go back to 1985, you don't have a median seller tenure as high as this. Okay, last couple of years we've been up as high as 10, and that we've hit 10 for a number of years out of the last 10 or so years. But this was historically down in the single digits. Now at 11, this number continues to go up. Obviously, the affordability issues and the high interest rates factor into that. Okay, home sellers and the experience that they're having, Haley, if you go to first time or repeat seller, this is just kind of, what you're seeing in the market right now. Repeat sellers coming in at 76% and first time seller coming in at 24%. So, 3 out of 4 sellers are repeat sellers in this market. Home sellers and their selling experience. So sales price compared with listing price by a number of weeks was on the market. So sales price compared with the listing price. All right. Less than a week, 100%. Less 1 to 2 weeks, 100%. 3 to 4 weeks, 99% of listing price. 5 to 8 weeks, still getting 98%. You get up over 9 to 16 weeks, 96%. 17 weeks or more, 94%. And this number might be more dramatic in your market. It's a good exercise to show a seller who's thinking about just waiting for the right one. Number of times asking price was reduced. Okay, 9% say none. They didn't reduce their asking price at all in 2025. 25% said one time. 9% twice. three times 6%, 51% four or more. Number of times asking price was reduced. So these are high numbers showing you the difference in the demand in this market. How satisfied are sellers today with the selling process? And remember, 2025, mostly getting record prices across this country, but yet only 66% satisfied with the selling process. Somewhat satisfied, 24%. So overall satisfied, but very satisfied with these prices. I would have thought 66% would have been higher. Speaks to some of the process complications. It's our job to make those complications easier, not harder. That factors into satisfaction here for sellers. Condition of the home sale: did minor renovations, 53%. Sold the home as is, 35%. That number was obviously much higher during 21 and 22. Carried out major renos, 12%. Expect that number to continue to be on the rise as we go into 2026, making homes more attractive in this competitive market. Okay, big news of the Sunday. It wasn't that President Trump visited the Washington Commander Stadium, actually spoke in the booth. I mean, that was one of the most awkward scenes I've ever seen in my life. The president between two NFL play-by-play analysts, and they actually tried to get him to announce a play. He's like, "Whoa, that was very good, huh? That was look at that. This is a big play." Just kind of just a very awkward moment there in the booth. No, that wasn't the biggest news. It was the and Haley, if you can share the article on Now Bam. You've got the President Roosevelt, who started the 30-year fixed, and now potentially President Trump floating out the 50-year mortgage plan. Okay, so 50-year mortgage plan from President Trump. He made headlines over the weekend on this proposal, shared this on his Truth Social post, and then it went all over X. He shared this image on Truth Social and compared the 30-year mortgage introduced under Franklin D. Roosevelt to his proposed 50-year mortgage. Pulte, here in the article, you can see Pulte thanked President Trump. We're indeed working on the 50-year mortgage, a complete game changer, was the tweet there. You could drop that off, Haley. So the 50-year mortgage obviously is just an extension of 20 more years of the 30-year fixed mortgage. America is like the only country that has a 30-year fixed mortgage. Okay. It was, it has brought a lot of wealth to a lot of people, opened up the opportunity for home ownership to a lot of people that wouldn't exist prior. To have 30-year fixed debt, know what your payment is on the debt for 30 years. A lot of countries, you got to continue to play the refi game within a 5-year period every 5 years. Now, I know most people don't live in their home for 30 years, but to have that kind of certainty, that's what's created that wealth gap between homeowners and renters, of like the certainty of your payments, and not, knowing what those are going to be on can afford you to go and make investments or savings in other areas. Now, the 50-year mortgage is not legal. Okay. So they'd have to, when they say working on it, they'd have to make changes under the Dodd-Frank Wall Street Reform and Consumer Protection Act passed after the 2008 financial crisis. The QM, qualified mortgage rule, limits loan terms to 30 years or less. Okay. To make 50-year mortgages widely available, the rule will need to be amended, or lenders would have to classify the loans as non-QM. So non-QM is typically, hey, your entrepreneur, your business owner who's got a lot, can show a ton of cash coming in, but goes non-QM, because, they're basically because their taxes are a mess, right? And they go non-QM loan, and it's not a government-backed loan. Okay. Those usually come with a higher rate and stricter underwriting standards because the bank knows the government, Uncle Sam's not going to come bail them out. Okay. So, think about that. When the bank doesn't have Uncle Sam helping them, they're more conservative, which means less people get those loans. When they come with a higher rate, stricter underwriting. And if that were the case on most loans, you'd probably see actually lower prices just based on free market dynamics on homes. You wouldn't see a runaway train on prices fueled by having all this liquidity in the market. Okay. Logan Motoshami cautioned against the move of 50-year mortgages, saying it could stall housing market recovery and slow homeowners' equity gains. Okay. Certainly slower equity gains. Do the math on 50 years. You're going to have slower equity gains. Logan says, I understand we have housing affordability challenges in America, but subsidizing more demand from 30 to 50-year mortgages is not the policy we want to take now. Housing has to balance itself out through slowing home price growth, wages, and increasing as it has for many decades. To add another subsidization, sorry about that, to subsidize this market, even further prevents from the healing process from occurring. Okay, so you can make the argument that some of the 30-year fixed mortgage products available today are subsidizing, which has increased home values. Okay, when we went down to 0% rates, we were subsidizing the market. Think about how this works in other areas, not just mortgage for a second. Okay. We subsidize student loans, make them available to everybody without any type of a qualification or ability to pay it back. And it doesn't matter if you're going into pottery school or you're going to be going to law school. It doesn't matter. You have the right to an education, even if it's something you can learn on YouTube. You have a right to it. You should be able to borrow as much as you want, even though you have no ability to repay that number. We subsidized the college loans, and what happened? Universities, these academic elitists took advantage of that, and they shoved high cost down the consumer's throat. Why? Because the government was putting all the liquidity into the market, and they could take advantage of it, and take advantage of it they did. And costs continue to just go up and up and up because they know that all the money's guaranteed. Okay, if they had to compete with the money that was available, you'd actually see costs come down, not up. So you've seen this in student loans. You subsidize the student loan and costs go up. You've seen this in health insurance. Okay, you subsidize health insurance. What happens? Health insurance keeps going up. You actually subsidize food. What happens? Food prices keep going up. Subsidize mortgages. What happens? House prices keep going up. Now, I understand what the mindset is here on the 50-year mortgage. It's like, hey, if rates aren't going to come down, how do we get the monthly payment down? Dave Ramsey, he talks about the 30-year mortgage, which has been great for, again, I go back to what it's done for wealth of Americans, the 30-year mortgage. It has been great for folks. Dave Ramsey hates the 30-year mortgage. What does he always promote? The 15-year mortgage. Don't do the 30-year. Do the 15-year. Look at all the interest you're paying. Look at all the interest you'd pay in the 50-year. It's astronomical. Now, you're not going to stay in the same home for 50 years. I get that. But you're essentially kind of like renting from the bank at that point. The bank gets to collect more fees. You slow down that equity growth. I'm not saying 30 is somehow 30 is the perfect number, but that's the number that we've had here since obviously Roosevelt. The 50-year mortgage doesn't solve the problem. It will only extend this unaffordability that we talk about. It does have to come down to, in the short term, rates, the long term, inventory and wage growth, of course. But I get the approach, but you saw a lot of backlash on this, and I think for right reasons. The real estate community understands what would happen the more you step in as a government into, sorry about that, as a free, and try to inflict your will on the free market, the more you inflate prices. And I think Pulte finally got it here yesterday. Haley, if you can go to that tweet that I sent you, he tweeted out, and this is the head of housing. We hear you. We're laser focused on ensuring the American dream for young people, and that can only happen on the economic level of home buying. A 50-year mortgage is simply a potential weapon in a wide arsenal of solutions that we are developing right now. Stay tuned. So, I mean, what he was doing there was kind of walking back a little bit from this Trump news, this Trump headline, by saying, and Pulte's like, he's a real estate guy. He understands what this would do. Okay. This wouldn't be good long term. I think he gets that. And he's walking it back a little bit, but without fully walking it back, and just kind of lighting a fire on Trump's Truth Social, which I think the rest of the market basically did. He acknowledged that, like, hey, we hear you. This is just one little tool and a variety of tools that we're considering and looking at. And so the fact that they're looking, here's my, where I come back to on this. The fact that the government is looking at a 50-year mortgage as a potential tool, as a potential fix for the affordability issues that we're faced with housing, tells me they have no idea what they are doing or how to solve the problem. All right. 100%. I think we have to also understand and recognize that 100% of people, I mean, Stacey Sutter got a little bit of, a little bit of comments when I interviewed him a couple of years ago here on the main channel, for saying, like, not everybody deserves to buy a home. Like, 100% of people, since when should 100% of age-ready people have to own a home, or should own a home, or need, or have the ability to own a home? And I was watching a video the other day. Somebody said, I remember when my Subway, Subway, the grinder shop, we call it grinders, Subway subs, sandwich shop. When the Subway shop worker was able to buy a home, the Subway guy can't buy a home anymore. I don't know about you guys, but when I used to go to Subway, it was my high school friends who were making my grinder, getting a little bit of extra cash from 4 p.m. till 9 p.m. at night, like on the weekdays. Like, no, because you can, get turkey and provolone and some shredded lettuce on a 6-inch. Yeah, I don't believe that position should qualify to buy a home. It's a starter position. It's a stopgap position. It is not a position that just because you have a job at Subway, you should have the right to buy a home. No, that's a position that you have at a certain point in life. And so, there you go. 50-year mortgage isn't going to happen. It's a cute little headline. We'll have some fun with it here this week. I don't believe it'll happen. I think it would be bad for it to happen. And I understand why they're floating it out there. How do we get the payment down in the short term? You get the payment down by getting this 30-year fixed mortgage rate to move down here in the short term. And that would be the biggest help in 2026. Inventory is not going to help in 2026. It takes too long. The biggest impact the government can have, obviously, is by deregulating what we can do. Builders are sitting on 2 million lots. Why are they sitting on 2 million lots? There's too many regulations on them. Take some of the regulations off, and you'll unlock some of the inventory, and that'll help long term. But in 26, the only way you're going to help affordability in 26, in the next 12 months, is moving the rate down a little bit. Speaking of rates, the 10-year comes in at 4.102. So relatively where we've been at the last few weeks here. And 30-year fix came in and the week last week at 6.32. So again, where we've been at, we'll see what happens as we get closer to this Fed meeting, which is in 30 days from now. 67% chance that the Fed will do the 25 basis point cut. All right. I want to join myself, Lisa, and Tom on BAMX Role Play Mastermind on Tuesdays. That's going to be tomorrow, 9 a.m. East Coast time. You get the replays in there. You can try it out for free, school.com/BAMX. We work on the conversations that are relevant right now, hoping you convert at a higher level. Go to school.com/BAMX, try it out for the next 7 days, and get into tomorrow's role play mastermind. All right. There's your hot sheet kickoff for the week. Don't be telling your buyers that they're going to get a 50-year mortgage. That day is not coming. I don't imagine that anytime soon. Keep working your deal. Have a great start to the week. I'll see you guys tomorrow. Until then, toodaloo.